Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Louie, and I'll be guiding you through the latest news and trends that affect your financial well-being. Today, we're starting with a story that's been making waves in the market: the surprise pause on tariffs by the U.S. government. This move has brought some much-needed relief to investors who have been navigating a roller coaster ride of volatility and uncertainty. The Indian markets, in particular, ended the week on a positive note, with small caps offsetting deeper losses thanks to a late rally. Now, let's take a closer look at what this means for investors. The pause on tariffs is seen as a temporary reprieve, and the market will be closely watching the outcome of the ongoing bilateral trade negotiations between India and the U.S. These talks have the potential to add more color to the trade potential of the domestic market. Analysts are also expecting inflation to moderate further due to cooling food prices, which could give room for the RBI to remain accommodating. However, caution is likely to prevail in the coming week given the holiday-led truncated trading sessions. From a technical perspective, the trend appears bearish unless the market decisively moves above 23,000, where significant open interest has been added. On the downside, support is placed at 22,750. A break below this level could intensify the bearish sentiment. As we move forward, it's essential to keep an eye on the earnings season and the India-US trade talks, which will shape sentiment in the market. We'll be discussing these topics in more detail throughout the show, so stay tuned for expert insights and analysis. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of global politics and economics, where the latest developments are having a significant impact on international relations and trade. Today, we're exploring the effects of U.S. President Donald Trump's policies on the global landscape. Recent news has seen Trump impose tariffs on goods from China, with rates as high as 145% on certain products. This move has led to a significant shift in the way countries are interacting with each other, with the European Union facing tariffs of 10% on a vast majority of goods and higher on steel, aluminum, and cars. In response, the EU is seeking to bolster trade ties with Central Asia, while also navigating the challenges posed by Trump's expansionist ambitions. The president has expressed a desire for Apple to begin building iPhones in the US, but experts say this is unlikely to happen due to various reasons, including manufacturing complexities and cost consideration. Meanwhile, Trump's actions are being seen as a challenge to the existing world order, with some analysts warning that his disregard for international law and state sovereignty could lead to a return to an era of great powers imposing their will on weaker nations. This has significant implications for global stability and cooperation, as countries like Russia and China pursue their own interests in regions such as Ukraine and Taiwan. As we navigate this complex and evolving landscape, it's essential to consider the potential risks and consequences of these developments. From trade wars to geopolitical tensions, the world is facing a period of significant uncertainty. We'll continue to monitor these events and provide you with in-depth analysis and insights to help you make sense of it all. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're closing out today's show with a thought-provoking story that highlights the intersection of technology and healthcare. As we've been exploring throughout this episode, the world of risk management is constantly evolving, and it's essential to stay informed about the latest developments. Now, let's dive into our final segment. You might have heard about a recent study published in the peer-reviewed journal Clinical Rehabilitation, which explores the potential of artificial intelligence and wearable technology to improve safety in stroke rehabilitation. Researchers from Simon Fraser University in British Columbia, led by Assistant Professor Gustavo Balbino, used sensors to monitor over 50 stroke survivors as they performed mobility tasks. The team analyzed the data to generate movement patterns, which revealed that those recovering from a stroke generally had smoother movements, indicating a more cautious approach compared to a control group of healthy participants. This information can be used to develop software that detects changes in movement patterns, potentially indicating a risk of falling, a significant concern for individuals recovering from stroke. The study suggests that this technology could be integrated into wearable devices like smartwatches, providing users with real-time warnings about potentially unstable or risky movements. The algorithm learns and adapts over time, becoming more assertive in its predictions as it gathers data. This innovative approach has the potential to personalize rehabilitation strategies, allowing clinicians to make informed decisions about patient care. As we consider the implications of this research, it's essential to acknowledge both the benefits and limitations of this technology. While AI-powered wearable devices may offer a promising solution for improving safety in stroke rehabilitation, there are also concerns about data privacy, accessibility, and the potential for over-reliance on technology. In conclusion, this study highlights the exciting possibilities at the intersection of technology and healthcare. As we move forward, it's crucial to prioritize responsible innovation, ensuring that these advancements are developed and implemented with careful consideration of their potential risks and benefits. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution.